Holman HR presents HR Fun and Stuff, infotainment that'll have you laughing, listening, and learning. With no further ado, here's your host, Michael Goldfarb.
Hey, welcome everybody. I'm Michael Goldfarb, President of Holman HR. Welcome to another Holman HR webinar. Today we've got a great guest. You guys are going to love this one. It's Will Cole with Orion International Insurance Services. Will, welcome.
Thank you. Thanks for having me.
And this is going to be extremely informative. It's going to tell all of us, especially business owners and executives who aren't covered with disability insurance, why it's important and that there are some really good solutions out there. So, well, first, little bit of background here.
Sure.
So how did you come to this business? Tell us a little bit about Orion.
Sure. So Orion International is a specialty general agency. We primarily work with other insurance brokers. Occasionally we work with some clients directly, but it's typically through their insurance broker. We act as a resource for these specialty products. And as our name says, international, that's our focus with expats, travelers, people coming to the United States. And the link with the disability side is, for the last 15 years, we've been insuring executives overseas, and they need things like life insurance and disability insurance. So we have specialty markets we go for those products. What's changed in the last couple of years is our cover holders from Lloyd's of London are now introducing high-limit disability products here in the United States. Now that's been occurring for a long time, but the difference is the packaging of them. We're now doing this on a group basis versus a one-off individual basis. And these are extremely high limits of disability insurance that fit on top of a client's existing coverage. So we help brokers walk them through the process, identify the need, how much coverage the client needs, and answer all their questions.
Obviously, it sounds sophisticated because when I hear Lloyd's of London, I'm thinking Buckingham Palace.
No.
I'm thinking Brinks trucks. I'm thinking big money.
Right.
But it's good. All right, everyone, stick around. We're going to go to the next slide and we get into the nitty-gritty. All right, welcome back, everybody. We're here with Will Cole. We're talking disability insurance. Will Cole of Orion Insurance Services, and we're in the first major slide, Will, and we're looking at a nice colorful pyramid. And so give us a little bit of the inside scoop. What are we looking at here?
Absolutely. What we're trying to do here is just visually give the viewer a graphic of how disability insurance can be structured. So the bottom base coverage, the green level, the disability coverage, is what typically people have through work or an individual plan, and it's designed to protect them in the event they were sick or injured, couldn't go to work, couldn't earn an income.
Right.
That will pay them a benefit to meet their expenses.
Something we're all pretty familiar with, okay?
Yeah, something really important. And so that applies to the majority of folks out there. They typically can get a policy that will get them to about 65% of income is really the target we want.
Okay.
So most people have that sort of, or should have that sort of benefit out there.
And that's really not sort of the typical thing that you guys get involved in.
No, not at all. We work with employee benefit brokers and sometimes occasionally a direct client with helping with the higher income folks where the base disability insurance coverage ends. So the problem with the base disability coverage for high income folks is that they're going to have a cap, $10,000, $15,000, $20,000 of coverage, and then that's it. So if you earn a higher income, the more income you earn, the less of a percentage of that income is going to be covered through the base disability insurance coverage. And then that's where we jump in.
And so let's go to the brown portion of the pyramid, multi-life. What do we
multi-life? So multi-life is an executive style disability insurance plan. You can get it through most disability insurance carriers, and it stacks on, just like the slide shows here, it stacks on top of a typical disability insurance plan. It's designed to get that executive group, or maybe you have a sales team, any high income earning folks, additional coverage to make sure that they're fully protected. The worst thing to do is go into disability and you're short $3,000 or $4,000 a month, because eventually that's going to burn a hole through your savings.
And so how does that operate to correct that deficiency?
It's designed to correct that deficiency, and as we go up the pyramid, we're getting more and more people covered. However, we get to a point with, just like on the regular disability policies, multi-life policies will only go to a certain amount. And then you have the same problem again once you have people that are earning even higher income.
And so that's it. So a lot of the focus that we're talking about here,
Yeah.
and that you as an enterprise focus on, is what we're looking at probably in this third level, correct?
That's correct. The HLDI, or high limit disability insurance coverage. So this is coverage that's typically through Lloyd's of London, and it sits on top of all these different layers. So I'll give you an example. We have a law firm in Los Angeles that we wrote through a broker. We have over 40 partners.
You're a nice guy. You write lawyers.
We were happy to be very love
See,
lawyers.
there's a reason I have them sitting here.
We absolutely bring all lawyers we can get. In that,
I want that on bring all lawyers. Gee, there's a bumper sticker.
well, why not?
Okay.
As long as they're earning high income. So, that policy is a $250,000 a month policy per partner, and it sits on top per month on top of all their coverage. Now, does each partner?
I just gotta say this. I think this slide should be reversed. I think that top should be green. That's a lot of green.
It is. It's quite a bit of money, and not all of them hit the $250,000 maximum, but it's there in the event. We don't know what happens in the future. A few years down the line, they might have a big case and make a lot of money, and guess what? Now we got them insured for that amount. So we've built a buffer in for these guys, as well as we can get very creative in plan designs. We have what are called lump sums. Mm-hmm. So we have policies that pay out for a certain duration on a monthly basis, and at the end, we lump sum them a multiple of their income. So if you're making, say, $1 million, we do a 5 times lump sum. We'll give you a check for $5 million, and or we can do it in the front. It all depends upon what that individual or group wants us to do. What is in their best interest, and we can custom design plans for them, which makes it very unique compared to other disabilities.
So this is a sophisticated type of coverage, clearly, yes, where you want someone with a degree of expertise, because we're not, again, this is a very select group that we're trying to cater to, right, for the most part.
Right, yeah, absolutely, and that's what our job is really to educate the broker, to help them educate their clients on, number one, what is this need, how do we solve this need, and where would we go to get it? Now, we're a managing general agency for several Lloyd's, what are called cover holders here in the United States, so we have different markets, if you will, that we can go to. Pricing's different between different cover holders for different industries, for different incomes, for different ages, and so on and so forth, just like regular disability insurance. So we bring all that to the table to help the client get the best value for their premium and the best plan design for their needs.
It's interesting, you're explaining it very well, because I'm a lay person and it's making sense to me.
Good.
I hope it's making sense to you. Let's go to the next slide, and I think Will's going to tell us a few more reasons of why this stuff is so valuable. All right, welcome back. I'm Goldfarb Holman HR. We're here with Will Cole of Orion Benefits. We're talking about disability insurance, and now we're going to get into some really interesting stuff. By the way, are you a hockey fan?
No.
No. Oh, well. This would be absolutely meaningless. It's probably meaningless to everyone out there. So, all right. I am proud of the Olympics. For those of you that don't know, I am Canadian. I am
two goals.
There we go. I'm curling. Come on.
We'll let you have those.
Shuffleboard on ice, man. Okay, so we're looking at traditional disability insurance. So
right,
tell us, give us a lowdown on what this is talking to us about.
Okay, so with traditional disability insurance, it's important that folks recognize that, especially people that earn commissions and bonuses and things like that, to look at their policies and understand if all of their income is covered. There are policies out there that will restrict what they consider income. For example, you may have a policy with a very narrow definition that just says salary. So if you were paid $100,000 a year, but you earn $300,000 a year in commissions and bonuses, right, through whatever your job is, then your disability policy is only going to cover that $100,000. That could be a problem if your lifestyle is designed around, sure, the entire package. So that's something we always talk to brokers about is, what exactly is their current plan design? because if they have a plan design that doesn't address those needs, either we need to get a different plan in place, or we need to figure out a different way of addressing those needs.
So it really because there are obviously tons of different types of compensation, and
Absolutely.
pretty much there's a fix for any of these. Pretty much in most disability policies, would you say? Most types of compensation will be covered.
There is typically a way of fixing these issues, and if it's not through an adjustment in the policy they currently have, or looking at a similar policy through a different carrier or a different product within that carrier, then there are solutions that we can bring to the table. And pretty much any kind of income except like a passive income can typically be covered. Yeah.
So what about, and interesting, I was looking at the third bullet that talks about benefits may be taxable.
Yeah.
I'm curious about that.
That's a big issue too, because most folks don't realize that when they become disabled, if they have not been paying for that premium, then their benefit is taxable. So at some point the IRS wants its share of the money. So when you're dealing with partnerships, for example, typically they will pay those taxes themselves and get the benefits income tax free. But it's something that your viewers should be aware of to determine whether that my benefit is taxable or not taxable. So even if you were making, say, $10,000 a month and you had a $6,500 a month benefit, and that's fine, your family can survive perfectly on that.
You got to account for taxes.
And then you don't realize there's a taxable issue there. You're really only going to walk away with $4,000 or so.
Wow.
That's a problem.
It is.
Yes.
Okay. All right. Let's go on to the next slide. All right, everybody. Welcome back. Will Cole, disability, Orion benefits. We've established one, how sophisticated a product this can be. Two, we've outlined some of the reasons people don't know that, reasons they should have it.
Right.
And now we're talking about simply just coverage deficits and problems. So explain a little bit about this, because these numbers are pretty dramatic.
Yeah, what we're trying to do here is just give a visual. What does this really mean? And we've talked about 65% of covered income is the target people should have, because if you think about it, you have $100,000, you're going to pay taxes. You typically walk away with deductions about $65,000. Makes sense. So what we're trying to show here is that makes sense, and for most people that $100,000 or below, they're going to have plenty of coverage. But as you go up the income scale, that benefit you get at work or have as an individual policy, or a combination of the two, is going to decrease as a percentage of your overall income.
So I want to make sure this is crystal clear
Sure.
to everyone viewing this. So obviously at 100,000 we're looking 65% coverage.
Perfect.
And the numbers are astonishing. At $500,000 we're dropping to 37%,
Yeah.
down to 18% at $1 million. I want to reiterate this, what you just said. So explain this again. What are we trying to understand in terms of the coverage here?
What we're trying to understand here is if the goal is to be at 65%, that'll keep you financially sound. And the more income you earn, the less of that, the smaller percentage of your income is being covered, the bigger the problem you have. Because someone making $500,000 or $1 million is living on that amount of money.
So this is saying that generally at $1 million you're going to get 18% covered.
Generally, yeah.
Right, and wow. So
So imagine living on
your lifestyle.
Imagine living on 18 cents of every dollar you're making today. That's what we're talking about. Or at $500,000, 37 cents of every dollar. You would think at these higher incomes, most people would say, "Gosh, you're a high income earner, you're rich." Well, not really. There's expenses, and life is expensive, and unfortunately, this is the one. Unlike medical insurance, which now has an unlimited benefit, disability doesn't work that way. It selects against those that earn more.
Interesting. And so that's something we're going to talk about now. Ways to deal with it. All right, let's go to the next slide, everybody. Okay, we're back. Mike Goldfarb with Will Cole of Orion. We're talking disability. I hope everybody's got their calculators out. We've been working up. God knows I need one. All right, Will.
Yes.
Looks like we've got a solution here. What do we do? What are we doing here?
We do. Again, we're graphically trying to illustrate here how all these pieces fit together. So let's talk about our executive making $100,000. They have a group disability policy, and he's at 65% of income. perfect.
Right.
That person's is in a good financial place in the event of a disability. The $500,000 executive, although we need to look at addressing that need. And how we're going to do that? We're going to do it with a combination of products. We're going to use a multi-life product,
Okay.
and on top of that, we're going to use a high-limit disability insurance product. And obviously, depending upon the age, the group, industry, all that stuff we've talked about before, these levels can vary greatly.
So I know we touched on these before in another slide. Again, explain, what do we think, what is multi-life when you say that?
Multi-life is a more traditional type of disability plan that will fit on top of the group disability policy. It's a separate policy, but it's designed to fill in that extra need. Now, if we need additional coverage, if we can't get enough multi-life coverage, because it'll cap out just like the traditional plan, we can go to our Lloyd's market and put a high-limit disability policy on top of that.
I see, okay.
Yeah.
And so we're looking at, on the really high income, the one we all want to be, the 1 million.
Right.
We're obviously looking at a very substantial portion represented by HLDI. Why is that?
Well, it's just further illustrating that what we call the traditional marketplace for disability insurance does not want to get into the high-risk market. They don't want to get into they want to be in the large group market, large numbers. That's safe for them because
Sure.
they can absorb those risks. So we need to go to Lloyd's of London and fill in this larger gap, because you can see here the traditional market is not stepping up. That client still has a major
Huge.
problem.
So that's, now I get it. So that's where your, Orion's interactions as a sort of a GA, but
Right.
comes into play with Lloyd's of London
Yes.
to bring in that HLDI, because that's really, for those level of executives, that's what you need.
You need that unique solution.
Okay.
You need that unique solution to bring to the table and be able to get them covered. And again, going back to how things have changed in the Lloyd's marketplace, we're now able to take small groups of executives and do guaranteed issue underwriting.
Right.
I mean, it's amazing. You couldn't
Guaranteed
do that.
issue, really.
Depending upon the group, again, there are a number of factors, but we've done all of our sales so far on a guaranteed issue basis. And you could even do this on a voluntary basis. So if you have a client who you've got a multi-life product in place and you've talked about, what else can we do for these folks, we can even look at doing the Lloyd's on a voluntary basis. So maybe not all the executives, like in a law
They can
firm, they all have a
offer it.
voting right, maybe they all don't want it. We have to have minimum participation, obviously, and some other things. But again, this goes back to the creativity that we can bring to the table with Lloyd's and literally design something specific for that group versus what traditionally happens is, here's our off-the-shelf product. Does
Yeah.
it fit you or not?
I'll tell you, it's so timely, because as we're going through the trials and tribulations of healthcare reform, and
Right.
From an HR perspective, we're looking at, well, how do we leverage ourselves to attract talent in terms of benefits? Man, bang! This is a really great tool.
It is a great tool, and there are certainly clients that a lot of times we're getting brokers that have told us the client has asked them for the solution.
Wow.
It would be nice to have brokers more proactive and say, we've got a solution, but we can understand the hesitation because this is not a very well-known market. It's a little scary. What's
Right.
Lloyd's of London? How does that work? But we help walk them through that whole
Exactly.
process.
Exactly.
And it's legitimate, and it's been around since longer than the United States has been formed. So we're very pleased with our ability to address these sort of needs. And an amazing thing is clients that have these kind of income levels and understand, especially visually, this kind of a chart, instantly go, wait a second, I've got a pretty big problem here.
Yeah, and they're going to have a bigger problem if they don't have coverage.
Yeah.
This is great. Let's go to the next slide. All right, everybody, we're back. We're here with Will Cole of Orion Insurance Services. We're talking about disability benefits. So I like this. As an owner of a business, sometimes I feel like the individual.
Right.
I don't know. I don't think that's exactly how you mean it.
No.
So I think that this is fascinating for our viewers. So explain what we're talking about when we're saying individual versus group. What are you referring to?
Yeah, absolutely. So our whole conversation has been about groups, employment groups, and so employee benefits and all that stuff. We want to make clear to our viewers that we do these for individuals as well. We have a dentist up in San Jose who needed a multi-million-dollar lump sum benefit.
Well, you write the most favorite lawyers and dentists.
Hey, you know,
as long as he's doing a lot of fillings and a lot of root canals.
Apparently, it is quite a few. So,
okay.
But what she needed was a policy to pay off certain mortgages and things of that nature, and create a lump sum fund on top of all the disability insurance that she already had. So we can. The point is, we can write those policies. You know, that sometimes a broker might have a client who is the owner of a business and very successful, but doesn't have a group of executives around them, but still needs these sort of solutions. We can provide them. Now, however, because we're talking about an individual, there will be examinations and financial underwriting, full price. It's not the most advantageous way of purchasing this. And we also put this in there to compare and contrast, because we know there are some folks who are attorneys and business owners that have groups of other high-income folks around them that may have bought their own policy. There's other ways of going about doing it. You can get the other folks on your team together and do a group policy.
Is that, so with the issue of exams and financials, I noticed it's under both categories. Yeah. Are there exams with the group side as well? I mean,
if we do it on a guaranteed issue basis, if we have the numbers, no. Those exams would disappear, the financials would disappear, and you're going to leverage the larger group by getting a discount. We can discount premiums by as much as 30%.
So just like in the old traditional healthcare model. You know,
exactly.
Same thing.
It's a volume thing, yeah. So, and we can, as we touched upon earlier, we can also do this on a voluntary or mandatory basis. And again, each of these is so different. I don't want to get too specific, but we like to work with that broker in designing something very, very specific to what those people need.
And in line with the concept of designing something very specific, and obviously we're talking in a lot of respects here with high wealth individuals. Yeah. Do you also help in terms of working with, if they have, obviously a lot of these people are going to have financial planners, tax advisors. Do you help integrate this into an overall financial plan?
That's an excellent point, because we want to bring those people to the table, because there could be other issues there that again, traditionally we work with employee benefit brokers, but there could be other issues there, such as a buy-sell agreement. Right. A lot of folks that are in partnerships have a buy-sell agreement funded with life insurance. What happens if someone becomes disabled?
That's right.
We can write up to $100 million lump sum disability policies to pay out those agreements, to fund those agreements. It's amazing how many life insurance policies are sold for buy-sell, but no disability.
Right. Now it's almost, as a lawyer, I've almost never seen disability.
You wouldn't, but that's where an accountant or a good advisor, an attorney, could come to the table and say, hey, we've got these other issues we need to address, because the employee benefit broker is going to be focusing on those benefit packages, not necessarily what a partnership needs to have. Or in the event of, we were looking at one deal, a surgical center. One of the surgeons was the what we call rainmaker, so to speak.
Right.
And they needed a very large amount of money to protect the rest of the surgeons in the event that that surgeon was unable to keep performing and bring in those customers. So we love hearing from all sorts of different people.
And I think it's great, and I think just the fact that you know, your level of sophistication, and that you brought up the idea of buy-sell agreements. You know, a lot of you guys, people watching us, I hope you've at least looked into that, because as a lawyer, I know how few partners actually even have buy-sell agreements, and again, how this fits into part of that, you know.
Yeah.
Okay, let's move on. Let's move on to the next slide. All right, welcome back, everybody. We're here with Will Cole of Orion, and this has been great. Will, this is really informative. And now what we're going to be focusing on, which I think is valuable not just for the brokers, but even for our own people, you know, that are owners, because you may be that opportunity, and these are the things they should be thinking about. So let's talk about who you would basically advise to look into this type of, you know, high quality disability insurance.
Absolutely. Typically, and again, each case is different, but typically we're talking about employees or owners or partners that are making $15,000 or more, because under that amount, traditionally
a month, obviously,
a month, yeah, right. But because traditionally under that amount, regular disability policies are more than sufficient.
Realize we've just lost 95%.
See you later.
Okay. Yeah, I'm still sitting here. I don't know why.
But you know, to be serious though, we live here in California.
Right.
You know, we have 37 licenses across the United States. We deal with people in Texas, deal with people on the East Coast, in New York, and so forth, Florida, and you know, in certain areas, a $200,000 income, while that's a lot of money,
Sure,
is average.
of course, it is. Matter of fact, I was just watching. I can't remember, but it might have been on public news a couple of days ago, and they were just talking about the different values. And if you live in California,
It's very expensive.
Yeah, 150,000 puts you in a pretty. I mean, it's a high level, but you're not at, compared to if you're in the Midwest, it's a very different situation.
Absolutely, yeah.
And then, so business owner or partnership.
Right, because then we're talking about potentially a key man disability policy or a buy-sell disability insurance policy. Need to address those needs. So if you had a high income earner for your business, you're not protecting yourself against the loss of that person due to disability. That could have a big impact upon the operations.
So again, so this might be something that accountants that might be watching this, anyone who is involved in designing these buy-sells might want to think this is a good tool to factor in.
Absolutely, absolutely. At least advise the clients that these solutions exist. The client's always going to make that final decision whether they're going to spend the money and go through the process. But I think it's part of due diligence these days to inform clients about things that are available to them to make sure they're completely protected.
And I agree. And I think incapacity in one fashion or another is a far more common occurrence than the death of a partner. It's probably far more likely.
It's 3 times more likely before the age of 65 than death.
Exactly. There you go. There you go. Got my actuarial right here, folks. All right, and then exclusions. What do we talk? Compensation exclusions. That's another issue here. Is that?
Yeah. Various compensation exclusions, commissions, bonuses, some forms of unusual compensation. We've actually seen a group that was because the parent company was a British company.
Okay.
They had car allowances, this weird pension allowance.
We don't allow anything in America.
Well, we those can be forms of compensation,
right,
but they're not necessarily covered by a disability insurance policy. And because this was all derived from the parent company in England, they wanted parity between all the partners around the multiple offices they have around in the world. And the U.S. is kind of their last place to establish an office. So it was a very unusual case because that's not something we insure here.
Right.
But we're able to do it.
Yeah. Good stuff. And then what else we have here? Employees that are critical to the business, obviously. That's
going back to somebody who's bringing in a large amount of revenue for that business. Without that person, that revenue goes away. How does the business address getting re-ramped up with a new salesperson, for example, or a new rainmaker, whatever industry that may be? Having a disability lump sum policy, bringing in several $1 million as a cushion to get over that difficult period could be the difference between the business surviving and not.
interesting.
Yeah.
And obviously, if they don't have, that would be a good candidate.
Give us a call.
But the other thing I wanted to mention, I know we've been talking about high income earners.
Sure.
But would it also be a fair statement that you could create very specific policies for individuals that might be in some very high risk professions? I mean, we have clients, for example, that have oil rigs, and these people get paid very well to work out on a rig, but it's very dangerous.
It's very dangerous, and it's something the traditional disability market doesn't want to have anything to do with. And again, our roots go back 15 years to writing international insurance policies, all the way from medical, life, disability, evac, travel, all sorts of those policies. And that's where we really got our start with Lloyd's, working with missionary groups going to very dangerous areas.
Wow.
And
that's really interesting stuff.
To this day, we continue to work with hundreds and hundreds and hundreds of clients around the world that are in dangerous places, dangerous occupations, or simply outside the United States, and your traditional carriers have no interest in insuring someone who's a correspondent in Moscow, for example.
Right.
So we have solutions to address all those industries and occupations and locations I always tease my cover holders at Lloyd's of London saying, I haven't found that astronaut yet, but when I have, they go, when you have, call us. We'll see. We'll figure it out. You know?
So look, if I'm an employer watching this, you know, and obviously a broker,
right.
How could I get the ball rolling with you guys? What would you need? How does the process work?
We're pretty low key. We'd like a conversation. We'd like to understand who you are, what it is you're trying to accomplish, who is your client, what are their needs. And let's have a conversation and be real frank about how can we address these things. There are cases where we've had brokers call up and say, here's what we're trying to do, and we'll advise them to do something. It doesn't involve us at all. You know, call this person, call this company. We've heard there's a solution on the regular disability market where you can address it that way. That's fine with us. What we're trying to do is build a relationship with that broker. We want a long-term relationship because that's really how we're successful, is by having brokers come back to us repeatedly.
So do you work, if the broker wants you to get together with the individuals, is that something you guys do, or do you recommend let the broker handle that?
It depends upon the case. We are either totally behind the scenes and the client has no idea we even exist, or we can be as proactive as having face-to-face meetings with that client. It depends upon the case, what the broker wants to accomplish, what the group or the client wants to accomplish. We're happy to accommodate any which way that they wish. I'll tell you right now, I mean, I do a ton of either Skype calls or conference calls. And every year I probably travel to a dozen different cities around the United States, either doing meetings with brokers or clients or a combination of the two. So we like to be as proactive as the broker will allow us.
I get that very well. All right, let's go to the next slide. All right, we're back. It's Will's 15 minutes. In this case, probably 15 seconds, but Will, so we've got your contact. Just tell everyone how any broker or client can reach you.
Simply call or email. I'm fairly available most of the time, and just love to understand a little bit more about your situation, your client's situation, and how we may be able to present a solution for you.
That's great. I just hope everyone who's watched this, you know, whether you're one of our brokers or one of our clients, that you really gained a strong understanding just of that there is this option out there for those of you that do have a lot potentially to lose, such as myself. This is stuff I don't think we think nearly enough about. Will, thank you so much, man, for really opening a window to this. Everybody, thank you for joining us on another Holman HR webinar. Stay tuned. We'll have another one shortly. Bye-bye.